discussion forward, and let's understand that fundamentally what could be in store for the IT space. We have Sandip Agarwal, Fund Manager at Sowilo Investment Managers, joining us on the show. And Sandip, hi, good afternoon and good to be speaking with you. And Sandip, let's talk about the latest trigger domestically, that is the Infosys buyback. Now the buyback has been announced. There were some hopes that maybe some other companies can also follow the suit in order to reward the shareholders. So Sandeep, firstly, help us with your take on how do you see this buyback announcement coming at a time where the investors were not having that much of a confidence on the growth outlook going ahead? And can other companies too follow the suit and announce buybacks? Is that a possibility?
Hey, hi, good afternoon, and thanks for having me on the show. So I will answer this question, and then I will also put forward 3 positives and 3 negatives, like just bull and bear for the sector, not for the company, because we run a PMS, so can't comment on any company. But let me put it this way, that IT sector in general generates huge amount of money, cash, and they work with the Fortune 500 companies, so the amount of working capital required is also very less. So whatever money they earn as PAT, mostly almost 90% of that is free cash flow. And because of that, if they don't distribute this cash in form of dividend or in form of buyback, generally it hurts their return ratios, because unnecessarily the return ratios looks very low because of high cash in the balance sheet. So they will have to continue to distribute both dividend and will have to do buyback whenever they accumulate cash. So right now, if you see, the accumulation of cash has been very significant in last 2 years. I believe that most of them will have to come and will have to do the buyback. So that answers your question on the buyback. I would like to now answer on the sector also. As I have mentioned earlier multiple times, that this sector is a ex-growth kind of sector on the large names, because what has happened is the penetration level of outsourcing in the larger market like US is very, very high. If you leave aside BPO from India's total exports, then probably we are at 95% of the global outsourcing which is happening. We already have 95-96% market share if you include the GCCs. So then there is no further much scope for gaining market share or growth. So this sector for the large cap will be like, low to high single digit for a long term. And for mid-sized companies, it could be, low double digits. And for small companies, it could be higher. And also, wage inflation is happening every year, which fortunately is being taken care of by rupee depreciation. So your earnings growth will also be single digit for large companies and maybe low double digit for the mid companies. And now you apply the price earning ratios. Most of the companies are trading between 4 to 8 times PEG ratio for an industry which is now X growth. So this is the big challenge which is there. And that is the reason, as already mentioned, if you see last 2-3 years, the sector has gone up and come back at the similar level, at least for the large caps. So that is the scenario which we are going through.
Understood. So that's your point with respect to valuations. But Sandeep, also wanted your thoughts if you've had interactions with the management. What is the kind of order booking that these companies are witnessing at this point in time? What is the commentary looking like, especially in the backdrop of a 25 basis point rate cut that is expected from Fed in its meeting next week? What is the sense that you're getting from managements on ground when it comes to order inflows?
No, so if you hear what managements are saying on various media channels, and we also interact with the smaller company managements on a regular basis, what we understand is that what has happened pre-COVID, the deals were of different type. They were much bigger. Post-COVID, quick implementation of digital became mainstream, and the sizes of deals went down, but execution period also went down substantially. So you saw very high growth for the mid-sized companies. And now, post this disruption of AI, what we are seeing, the deals have even become much smaller. So they are generally, whoever can quickly turn them around will see better growth in their revenues. But and I would not say that large companies are not getting. In fact, always large companies will get the lion's share of any new technology, new deals which come. Problem is that by the time those deals make a material difference to their revenue growth, it takes long time. Secondly, the deal sizes themselves are falling very, very substantially. And third, this is the first disruption in the last 30-35 years where efforts are going down. Till now, all disruptions of last 30 years technology has transitioned from one technology to another, which means that you have to retrain, reskill your workforce, and you get the new work. But this time the efforts are going down, and because efforts are going down in such a big way, you have to not only make up that loss of revenue because of efforts going down, you also have to scout for more growth. So I think we are definitely in a challenging situation for the large companies. It will be tough to grow more than mid single digits or low high digit or 6-7% growth. And for the mid-sized companies also more than 10-12% growth will be a challenge, and small size companies maybe 15-20% selectively. That is the way we look at the whole sector. This situation is totally different than all the transitions we have seen in last 30 years. I believe that there is a significant impact on the efforts which are required to execute the work.
All right, that's the take coming in on the sector growth outlook. But Sandip, off late, the other talking point for the IT space is turning out to be the Hire Act, wherein a 25% tax is being proposed on certain payments U.S. taxpayer makes to the foreign persons for services that benefit the U.S. consumers. But along with that, the Indian IT, as we know, that has a major exposure to the U.S. markets along with that. And yes, there are some concerns, but how do you view this? Do you see that getting this act in legislation and in work, is that a possibility, or for now the overall sector can really ignore this in the time being?
See, I won't say we can ignore it because, you don't know what happens. Trump, he can, enforce something. But I will tell you my experience since 2004, I have been seeing at least 4 or 5 times these attempts have been made in some or other form, which is detrimental to Indian IT services. But we have seen that, they have finally impacted badly the US companies, and they have also impacted the margins of Indian companies. So 2014 onwards, if you see, the margin of the industry has gone down for the large cap in a substantial way. And this has happened because the on-site hiring has gone up substantially. And in case of on-site hiring, the costs are disproportionately high, number one. Number two, they are not so fungible as the Indian resources generally are, because once a person leaves Indian borders, then he is fine to work from any city in the US. He's more agile and fungible, whereas compared to that, a US worker will prefer to be on his base location. So the actual utilization which you get from the resources is much lower when you hire locals than in people who you send from India. So it is detrimental to margins and everything. I don't think that you can blanketly apply a 25% or something. It can happen for a short period of time, then it has to be reversed, because these companies will not be able to work or survive, and that I think most of the US corporates know. But yes, they can ask for little more focus on local hiring. But problem is that after Lehman crisis, there has not been a situation where there has been a big unemployment in the US in the technology software services side. So where will you get manpower even if you apply this act? And also I think this is more of a macro impact rather than actually on ground doing assessment and bringing in something. That is the way we look at it.
So that's as far as the Hire Act is concerned. But Sandip, since AI is also the buzz of the town, if a retail investor wants to enjoy this AI wave, what would your recommendation be? I understand the broad consensus is that Indian IT companies have missed the AI buzz. But what will your recommendation be then to enjoy this AI wave? Will it be through global IT companies then?
So I don't agree to the point that Indian IT companies have missed the bus. We are the ones who will finally do it. We will be providing the services and all. The challenge is that the effort of AI is going down by 30%, so that you cannot make up. But all these large, small, mid-sized Indian IT companies will be finally executing those deals. It cannot be done by anyone else. It is a matter of time. We will reskill, retrain our workforce. But for investors in India, I think you have to look for more and more smaller companies. As I said, the deal sizes are now $50,000, $100,000, $200,000, and those numbers are material to very small companies. So you have to find those companies, and probably you will make more returns. So this is a very clear phase which we are saying. Pre-2019, any disruption which came, the biggest beneficiary were the large cap, followed by mid and small. Post-COVID, the biggest beneficiaries were the mid caps like Mindtree, LTTS, LTI, Persistent. All of them went up 8 to 10 times in 2 years. And this wave, I think the biggest beneficiary will be very small size companies, which will be disproportionate beneficiary of this evolution. So we believe that, for the large caps, the peg ratios are very, very high, and for the mid caps also. But for small cap, you can see some good growth, and the peg ratios may look reasonable.
Right, interesting take when it comes to the IT space. But Sandip, with this, we let you go on that. Thank you so much for taking the time out and speaking with us on a whole host of factors that are likely at play when it comes to the Indian IT space.
Thank you.
But for this, let's move on and let's